Hello, everybody. Welcome to our Council of Governors public meeting on Monday, the 9th of February. We are quorate, so we can continue with our proceedings, with the main item today being the annual report and accounts. So first of all, if I may, apologies for absence from, I have got those from Councillor Chambers, Jackie White, Emma Dallimore, Sean Johnson, Ted Burnside, excuse me, Francis Odukwe, Brian Swallow, Dean Royals, Steph Poole and Keith Nurkham for today. So thank you for those who've been able to attend this special meeting today. Declarations of interest, you have them in your pack. Is there anything we're discussing on the agenda today that is a conflict for any governor colleagues? I can't see any hands up suggesting that, so I'm going to take that as no. And we'll go on to the annual reports and accounts. And just to mention, just a housekeeping thing here. Obviously, our hands are quite tied with these accounts because obviously they have to go to Parliament. What I think probably be appropriate is we'll have the minutes from the Council of Governors meeting we had in January, and then the minutes from this meeting today, both of them will go to the Council of Governor meeting in April, just to, you know, dot the I and cross the T on all of that. But we'll do them as two separate set of minutes, even though we'd hoped we'd been able to do the item we're doing today in January. Hope that's clear for everyone, and you know the process that will follow forward after this meeting. So without further ado, Pete is here. Welcome, Pete. You're going to lead on the annual report and accounts. Thank you.
Thanks, Caroline. I think Michelle's put her hand up and Stella.
Oh, sorry, Michelle.
Yeah, can I just say thanks to Tim, who has obviously read them in detail, which is fantastic, Tim, so very well done. We do expect people to, but Tim did give us some comments back, mainly around two things, which Stella will explain. One was the tense of the document and the date. Now, the date is incorrect, so we'll come on to that in a second, so well done. But a lot of this, as the chair said, is retrospectively. So it's actually written on the 31st of March last year for the year before. So a lot of it is in that tense. And if you remember, we would have normally submitted them a lot sooner along with other trusts, but we were waiting for the local government pension scheme, as we always do. So we did provide at the AGM an overview of the accounts then, but obviously this is the formal one, and the more important actually is Gavin really being here from our external auditors to go over their findings. But I'll let Stella and Pete explain a bit more of the detail, Tim, but thank you so much, really useful, really helpful points, but I hope that we can explain why they've been written as they have been, but thank you for that again as well. Stella, do you want to start and then pass back over to Pete? Is that okay? Thanks, Chair.
Yeah, that's fine. So governors have a statutory responsibility to receive the annual report and accounts. These get approved by the board of directors. Ordinarily, we try and get them, you know, to the AGM, but because of the local government pension scheme issue that we've had for a number of years, we don't actually receive them at a Council of Governors until a little bit later in the year. In terms of the tenses, thank you, Tim, for your comments today that I saw today on that. They are written in past tense in some sections and in forward tense in other sections. So if it's talking about the performance over the year, it'll be written in the past tense, and if it's talking about what we're looking ahead to, it'll be written in the future tense, as you're probably aware. But we will be looking at that again this year, so that's something that we will pick up. So thank you for that. So they have been laid before Parliament, so we aren't allowed to make any changes to these once they've been laid before Parliament. But what we can do on our website for that date around the financial accounts, the sign-off date, is to put a note on our website, which we will be doing after this meeting. So they are here for noting because the Council of Governors is due to receive them. And that's it about the annual report. So I'll hand over to Pete, who will introduce you to the annual accounts.
Can I just ask Tim if he would like to say anything? Because he obviously said, for those of you not in the know, you might be thinking, what is going on here? Tim sent a note to myself and Michelle where he picked up this issue about the past tense and present tense being used in the report and a date error. So just for everyone else to know, Tim, did you want to say anything?
No, it's all right. I won't delay the meeting. It was a labour of love, if you like. So there you are. It's done.
Thanks, Tim. Thank you. So I hope everybody's assured with dealing with that as we go forward. Thank you. Pete.
Thanks, Caroline. So as Stella said, this is the formal presentation of the accounts to the governors. Most governors will have been at the annual members meeting last year, where I did present a financial review of the year at the annual members meeting. That was based on our draft accounts that were going through the audit at the time. And I'm pleased to say that there were no changes from those headlines that I presented. But if I can pull just a few things out, Caroline, then we can open for questions. As it's a public meeting, we did complete our accounts on a going concern basis. And I think it's important to recognise that, because that means we've done an assessment on our ability to continue to provide services and operate in the future. So we did a going concern assessment that was reported to our board. As a trust, we met our financial control target for the year, which was to deliver a break-even plan. We slightly performed a small bit better than that, but obviously within the accounts, we still posted a deficit due to technical adjustments for the local government pension scheme and impairment. And I think it's worth noting some of those impairments are linked to leased assets and ties up under, some technical accounting called IFRS 16. You can see from the accounts, we ended the year with a strong cash balance of £18 million in the bank. And that was after we'd invested in our infrastructure of 12 million for estates and digital. And also we'd paid 94% of our supplies on time in terms of the value of those invoices. And just a few other quick ones, as a trust, we have no borrowing. So, we've had no borrowing on our balance sheet now for about 3 or 4 years. We took an opportunity 4 or 5 years ago now to settle any outstanding debt, which was really good. Our turnover in the accounts did increase to £278 million from the previous year, and that reflects some of the growth on the trust and the fact that we've been taking on, more lead provider responsibilities. And likewise, pay continues to be our largest area of expenditure. But what we are now starting to see is roughly 30% of our expenditure is the purchase of healthcare from others, which again is representative of our lead provider role that we seem to be adopting in the system. So I have been reporting the in-year position to the Council of Governors at every meeting, and folk on the call will know that we've continued to maintain a strong position in year. So I think I'll stop there, Caroline. I'm happy to take any questions.
Thanks. I'll just admit Anthony into the call. Right. Welcome, Anthony. Thanks for making it today. So I'll open it up to governors for any questions or clarification or points you'd like to make. Any hands up there? I'm not seeing any hands up. Okay. Okay. All right, then in that case, are the governors happy with the content of the report and it provides the details that you need to note it? Yeah. Great. Okay, brilliant. Thank you very much. Now, we also obviously don't just rely on, what we say internally. Obviously, we have our internal and external auditors involved with us on a huge area of work that we undertake. And today, thank you, Gavin, for being with us today. Gavin Barker, who's from Mazars. Thank you today. Gavin, you're going to just give a verbal report from the perspective of the external auditor. Thank you.
Thanks, Chair, and good morning, everybody. Yes, my name's Gavin Barker. I'm the engagement lead from Forvis Mazars. I'm an audit director. So the purpose here is and I'll spend a few minutes, if you don't mind, to sort of explain the audit so that you understand sort of what we do, what we think. There are two main parts to our audit. The first one is the audit of the accounts, the financial statements that are sort of part of the annual report and accounts. We also carry out audit work on some of the specific disclosures within the annual report. And we give an overall view on the annual report in terms of it being consistent with our knowledge. We work, the other part of our audit is what's described as value for money. That is a review that we carry out of your arrangements to ensure economy, efficiency and effectiveness in the use of your resources. So I'm going to start with the audit of the accounts. We work with management throughout the audit, and I'd have to say that I'm particularly grateful to the work of who are our key contacts on the audit. So Pete Beckwith, that's here this afternoon, and his team, including Ian Ormond, and in particular, I'd like to give a mention to Karen Towes, who is really our key contact on the audit of the accounts. We are really grateful to the work that Karen undertakes. We can only deliver our audit with the cooperation of management, and I think it's fair to say that Karen is exceptionally good. It's very clear that the trust and Karen take a pride in the accounts, and I think that's reflected in a very good quality set of financial statements, and more importantly to us, that those financial statements are supported by good supporting evidence, and Karen supports our audit throughout together with other members of your team. And as well as working with management throughout the audit, we report to the audit committee. Audit committee holds management to account for the annual report and the accounts and the underpinning arrangements that you have in place across all the areas you would expect, such as your risk management, the work of internal audit, etc. And it holds us to account for the delivery of our audit. And it's challenging, and I'd like to sort of pay testament to Stuart McKinnon Evans, who has since moved on. I found him to be an excellent chair of the audit committee and provided exactly the right sort of balance of challenge and support, I think. And I know he's moved on. I'm about to move on too as well. I'll say a little bit about that at the end. But reporting to the audit committee is really important to us. So we set out our planned audit work in our audit strategy memorandum. That's sort of agreed at the commencement of the audit. And the bulk of our initial field work is carried out to what is a very tight timetable for most foundation trusts. So we carry out the bulk of our field work in May and June. So we did that in May and June 2025. And we've carried out subsequent follow-up work. So the issue, which I think has already been alluded to in the introduction that we have here, is that the trust is one of the relatively small number of trusts who has an extended timetable, and that's due to having a number of people who are in the East Riding Pension Fund. So it's relatively unusual for that to be the case. Where we have a pension fund, part of our methodology is we have to get assurance from the auditor of that pension fund. So the auditor of the pension fund, which in this case is another team within Forvis Mazars, so it's one of our audits, but it will be just the same process if it was a different audit firm. We get assurance from them over the assets and liabilities in the fund, and consequently over your share of the assets and liabilities in the fund. Pension fund auditors' work is very extensive. It's really complex and detailed work, and it doesn't generally get reported until much later in the financial year, well after the normal deadline for foundation trusts of the end of June, I think it was, in 2025. And we actually got the final assurances from the pension fund auditor on the 19th of December 2025. So we quickly evaluated the findings and were able to sign off the accounts on the 22nd of December, rather than the 30th of June, which would have normally been the case if you didn't have this issue with having a pension fund. I think it's a cause of intense frustration to management, the Council of Governors, the board, and us actually, because we don't really want it to drift on. We want to sort of do the audit to the timetable and sort of sign off and move on. But it is incredibly frustrating that we had to wait so long to be able to conclude the audit, particularly as the pension fund auditor gave a clean bill of health. There was one issue that was reported to us, which was a very minor overstatement of assets in the fund. It was so minor, it was what we describe as trivial, so it wasn't even reportable to the audit committee. It was so insignificant. And I think not only were there no issues to report, I think it would be very difficult to imagine a scenario where waiting for that pension fund assurance, which we have to do every year, it's a very minuscule chance, I think, that there would ever be something material to report and impact on your accounts. But we're a bit locked in this position. So I just thought I'd spend a few minutes to explain that. We report our findings on the audit of the accounts in the audit completion report, and we issued that on the 17th of June before taking that to the audit committee. That sets out our findings on the audit. And following on from our audit completion report, we present follow-up findings in our follow-up letter, or in your case, follow-up letters. So we issued 3 follow-up letters last year, and largely to coincide with reporting again to additional meetings of the audit committee, but we updated our findings as we went through these letters and through these audit committees. So we reported 1 follow-up letter on the 21st of August, another on the 3rd of November, and the final one on the 19th of December, when we'd received the pension fund audit assurance and we're ready to sign off. And these letters just update the progress of the audit, mainly that we're still waiting for the pension fund audit letter, which is unfortunate. So that explains how we report to the audit committee and keep them on board, and sort of audit committee is able to question us and challenge us about our findings as we go along. So when we carry out our audit work, we adopt a risk-based audit approach. We substantively test all of the financial statements and disclosures. We do focus on the key risk areas. It is a very intense process for your teams. And I mentioned Karen Towers earlier as sort of being key to that. We appreciate not only her cooperation, but her patience, because it is a challenging process. The risk areas that we identified on your audit, we describe them as significant risks. It's not that we suspect you of any sort of wrongdoing, but we're required to be professionally skeptical at all times. That is a term that's actually written into auditing standards, and therefore we carry out testing in these areas. The significant risk areas are ones which we think, if anything went wrong, it could lead to a material misstatement of your financial statements. So the 3 significant risk areas that we identified on your audit were the management override of controls. And that is a risk, there is a significant risk on all audits in the public and the private sector. And that's the risk that however strong an organisation's system of internal control might be, management, particularly senior management, is in a position, if it should choose to do so, to override those controls. So we carry out specific audit testing to ensure that there hasn't been any override of those controls. And as you might expect, we had nothing to report on that. We didn't identify any evidence of any management override of controls. The next significant risk area is revenue recognition. So it's important, particularly in terms of your financial performance, that income is properly recognised, that it's recognised in the right financial year. So we look at sort of what we describe as cut-off. So whether income is being credited to the correct financial year. This is an area which could be used to manipulate the financial outcome. So it is an area, again, where we remain sceptical, but you'll be pleased to report we didn't identify any issues with revenue recognition either. The third significant risk is valuation of land and buildings. That's a significant risk, largely because significant figures within your financial statements relating to those valuations and the exercise of a lot of judgment. And that judgment often relies on sort of external valuers. So that's one of the reasons why we treat that as a significant risk. And again, we didn't have any significant issues to report in relation to that. We also identified 4 areas which we describe not as significant risks, but enhanced risks. So areas where we also paid close attention. Excuse me a moment. So those areas were accounting for leases under IFRS 16, which is a very technical auditing standard, quite dry, some find, even I find it dry and I'm an auditor, but we looked at that very closely. We also looked at deferred income closely to ensure that that had been accounted for properly. Intangible assets, because the trust does have a fairly significant amount of intangible assets, and also we identified the pension disclosures as an enhanced area for the reasons that I mentioned earlier about the pension fund audit assurance. And the outcome of our audit really was that there was no significant issues to report. There's nothing really that I would draw to the attention of the Council of Governors. There were some minor matters reported, but I think it is testament to your arrangements that we identified one unadjusted misstatement. So an unadjusted misstatement is one where we've done work that you haven't amended in the final version of the financial statements, but you haven't amended it, but it's not material. So we had one unadjusted misstatement. And also this is quite unusual, there weren't any adjusted misstatements. So despite all the challenges made to your accounts and the testing that we carried out, there were no adjustments to the figures in your financial statements. The only thing that there were a number of areas where the disclosures were enhanced or clarified. That was the only thing that sort of was reported as part of the audit. So I would say that was a very good outcome in terms of the audit of financial statements. I mentioned our other key area of work, which was it's called value for money work. It's not a view on whether you provide value for money. It's a review of your arrangements for economy, efficiency and effectiveness in the use of resources. We don't give an overall view. We don't give an opinion. We don't sort of reach a conclusion on whether you provide value for money. But what we do is we report by exception. So the exceptions that we would report is if there was any areas of concern, we would identify a significant weakness in your arrangements. And if we did identify a significant weakness in your arrangements, we would make a recommendation in relation to that. I'm pleased to report that we didn't identify any significant weaknesses in your arrangements. The areas that we look at as part of this work are hopefully areas which the Council of Governors would agree are the right areas for auditors to consider when looking at the sort of wider arrangements that the Trust has in place. Financial sustainability is one, governance is another, and the final area is what is described as improving economy, efficiency and effectiveness. And the focus of that final area is along recognising that it's not just about financial performance, it's about managing the operational performance of the organisation. And it also looks at how you work in partnership and how you go about procuring goods and services. As I've already said, there were no exceptions identified, but within our auditor's annual report, which we issued on the 22nd of December, just after we gave the opinion on the financial statements, we report our findings in a commentary on your arrangements. So in terms of financial sustainability, clearly, everywhere in the public sector has challenges in relation to the financial position. We can't really comment on all of the challenges that you face. A lot of things are outside of your control and you've got to work within the sort of constraints that you operate under. But our view is that you do that in the best possible way that you can in the circumstances that you face. So hence there was no sort of identification of a significant weakness in your arrangements. In terms of your governance arrangements, you have in place everything that we would expect to find at a trust of this nature. And in terms of improving economy, efficiency and effectiveness, we usually look to CQC. CQC are better placed to talk about sort of how well you're doing operationally. It is some time since CQC did a full inspection of the trust. I think that was back in 2018-19. But there was an inspection of the CAMS inpatient unit in the year, and that was assessed as good. and that is a good outcome. And from everything that we can see, you have arrangements in place to manage performance and deal with issues that might arise as a result of that. And there are good examples of working in partnership and procurement of goods and services. So that concludes what I wanted to say about our audit, but I just wanted to mention some changes to the audit team for 25-26. I'm retiring at the end of March, 46 days to go in fact, and I am counting and have been for some time. I'm being replaced by Nicola Hallis. Nicola has met the new chair of the audit commission, sorry, the audit committee, Catherine Smart, so arrangements are being put in place for the handover in terms of those arrangements, and we have time booked in the diary to introduce Nicola to Pete and the team. There will be continuity in the audit. It should be a smooth transition. We're making no changes to the audit manager, who is Nora Natova, or the team leader on the audit, who is Joe Sinclair. So there will be good continuity. And I think the final thing I would like to say, after working with the trust for a few years now, is to thank everybody for the sort of cooperation, the good working relationship that we've had, a good working relationship based on challenge, though I must emphasize that, and to wish everybody well as individuals, and also to wish the trust well in its future endeavours. So thank you, Chair. I have spent a few minutes on that, but I hope it was helpful.
Thank you so much, Gavin, and thank you for I think a really sort of thorough sort of summary about the process, but also the findings, which I hope everyone feels gives them real confidence and assurance about how we operate at Humber. And thank you also for the comments about Karen and Ian and Pete and the whole team, but also about Stuart as well. And it's really appreciated, because the audit committee is a really important part of our framework for governance and oversight. So thank you again for that. And finally, just to wish you all, on behalf of us all, the very, very best in your retirement, and thank you for your work with us. Thank you so much, Gavin. Colleagues, are there any questions or comments that governors would like to make? Tim?
Yes, thank you. I've got a query, but first of all, a comment. You look too young to retire, but there we are. Going back to the East Riding of Yorkshire Council pension scheme, I should know this because I've been doing this meeting for a few years. Is that a standalone or a pension scheme, or are they part of a council, a general county council pension scheme, or what? Is it standalone or part of a bigger scheme?
It is linked to one of the local authorities in the area. I forget, because I'm a bit more
East Riding
based. Yeah, East Riding. It is linked to that, but the pension fund does sort of sit as a sort of a separate entity in its own right. All of the sort of funds.
But they've got their own pension scheme, is what I'm trying to say. It's not part of a national.
Yes.
And is there nothing therefore?
But there are lots of features of a local government pension scheme that are sort of common across all schemes of that nature.
There's nothing therefore that can be done with the East Riding pension scheme
in terms of accelerating the results of the audit. No, not really.
In view of the problem.
Not really. I think it is worth the new engagement lead exploring if there's anything that can be done, but I don't think it's about speeding up the audit or anything that's done at the pension fund side. I think it's exploring do we really need to wait for something that is unlikely to have an impact.
Can I bring Jonathan in?
Yeah.
Jonathan.
Yeah, thanks very much, Chair. I am not an expert on the East Riding Pension Fund, but it's not just a standalone fund for the council on its own. I think it's part, Pete may know more than I do, but it's part of Border to Coast, which is a collaboration of various other pension funds and schemes. We also arrange the pensions for quite a range of other organisations like yourself as well. So, I mean, I'm sure Pete will know more than I do, but it's not just us in the East Riding. It's a bigger issue than that in terms of the complexity, as far as I know. Thanks, Caroline.
Yes,
Yeah,
to,
thanks.
to clarify, there'll be lots of different sort of bodies, not just the local authority, that are part of the scheme, including yourself.
Yeah.
Sorry.
It's not all on East Riding's shoulders. I'm sure Jonathan would sort it all out for us if it was. Pete.
Just 2 points, just on Jonathan's point. I think you're absolutely right, Jonathan. I think it was the former Humberside Pension Fund. So I'm going back to 96 now, and it's the former Humberside local authorities that formed that pension fund. And then I think Fire and Rescue and Police might also be part of it. You know, so East Riding lead and host it as a standalone fund. And the other point I was going to make, Caroline, is for a number of years, NHSE have been lobbying to change the general accounting manual for the local government pension scheme to be excluded, not from audit opinion, but not seen as material to get the audit opinion. But it's been to the Financial Reporting Council, I believe, 3 or 4 times now, and as yet they've not been successful in getting that through, because we're not alone. There's probably a dozen or so authorities in the same boat.
Yeah.
And I was just going to say, sorry, Chair.
Sorry, Gavin, go on.
I was just going to say that because the audit of a pension fund, which, you know, has billions of pounds of sort of assets and liabilities, it's so rigorous that there is nothing really that can be done to bring forward the timetable. The pension fund auditor has to do their work. It's billions, but your share of it is quite small. That's the issue we've got here. And the best thing is what Pete's described, actually, is somebody says, in terms of your accounts, it's just not necessary to do it because it's not helpful and it's not going to sort of have an impact really on the final position for either for you or for the NHS as a whole, which is the accounts that sort of NAO sort of prepare. Oh, sorry, review. The sort of, yeah.
Okay. Thanks for that additional information. I think we've all come away from this, well, some of us know more about these pension schemes than we probably thought about before. But it also ties in with also part of it, from what I understand, is also some of the staff that we're involved with through social work side of things in our organisation, and you know, that collaboration that goes on. So anyway, there it is. But from what you've said, Gavin, and what's in the report, looking forward, regardless of whatever happens with the pension scheme next year that we're reliant on to get this all sorted, we can go into the next financial year with a sense of really proper controls within Humber that have been there for some years now and will continue to be. They haven't changed and they will continue. So thank you. Okay, I can't see anybody else with any hands up. Last chance for that. Okay, so we've had both the annual report and accounts, and obviously from Gavin, an external sort of appraisal summary of how we operate, which I think you would hopefully agree is very healthy indeed. I haven't got any other business, therefore I think we can close this meeting. I just want to say particularly to all the governors who've attended today, thank you so much for making time for this additional meeting. We could have left it to April, Council of Governors, but I really felt, you know, once we had this pension issue sorted and laid before Parliament, I wanted to give us an early opportunity for us to deal with this as we could. So I really appreciate you making that additional time in between Council of Governors meetings. Thank you very much. Comments in terms of review of the meeting from colleagues? No, are you happy with the papers? I know it was a big paper that was sent out. Okay, I've got something in the chat. I'm just going to double check on that. Yeah, from Michelle again. Thanks, very appreciated from everybody today. Okay, in that case, have a great week. Hopefully rain will stop at some point to allow us to get outside and get a bit of vitamin D in our system. But have a great week, everybody. Thank you very much indeed. Cheers.
Thanks all. Bye.